Hi, this is Andy Hoffman of CryptoGoldCentral.com, where I publish a daily crypto-focused blog and provide professional cryptocurrency consulting services to individuals and altcoin developers alike. Okay, to say the past 36 hours have been maddening is an understatement. Although, to put things into perspective, consider my tweet yesterday that it's just another ridiculous day in Bitcoin en route to Max Kaiser's $100,000 price target and beyond. Also, that for most of the summer, Bitcoin traded in the 6,000s, having bounced off the $100 billion market cap level 6 times since first touching it February 6th, the day the Mt. Gox trustee dumped 6,000 Bitcoin for decidedly non-fundamental reasons. Thus, today's horrible price of $7,700 must be considered in context, given that it is $2,000 above the lows and $5,000 above the year-ago level, when, to the week, SegWit locked in on Bitcoin, forever ending the scaling debate. To that end, tonight marks the one-year anniversary of the Bcash fork, which, for better or worse, was a decidedly positive development in Bitcoin's overall development. So where do I start? In describing the price action of an asset that is yet to see the reduction in volatility that will signal its movement to the next level of legitimacy. This, as it's proven its value in spades by maintaining said $100 billion market cap for 9 months, 7 of which coincided with a brutal bear market. First, that before I woke to this morning's carnage, I was planning to write about the veritable tsunami of Bitcoin bullish news items relentlessly pelting the airwaves. Today, more than ever. To wit, in the past 24 hours alone, I've tweeted about the collapse of the Iranian rial and Turkish lira, record US Treasury borrowing, blatant all-out bond monetization by the Bank of Japan, record high UK household debt, the EU warning of the sustainability of Greek debt, a survey claiming millennials believe Bitcoin is the best way to save for the future, Vanguard Precious Metal and Mining Fund being shut down, Mike Novogratz launching his long-awaited cryptocurrency merchant bank, Bitmain generating $1 billion of profits last quarter, increasing clarity regarding the SEC's ETF approval process, and last but not least, an article claiming just 2% of Americans own Bitcoin, but 26% are intrigued. Second, that not a single Bitcoin negative news item is visible, which frankly has been the case all year. In my view, the only real negative we've had to deal with was the Mt. Gox trustees' undisciplined, panic-like selling in December through February, and again in May and June, which I say in quotes, given that said negative was due to a decidedly non-fundamental factor, which has since permanently ended. Otherwise, Bitcoin's only real 2018 issue has been how fast the recovery would be, retarded as it was by the Mt. Gox trustee, from the epic crypto pump that ended with newly minted Wall Street crypto hedge funds equally responsibly bidding up altcoins to insane levels in early January. To that end, I tweeted yesterday that in terms of Bitcoin worries, 2017 was the year of the scaling debate, 1H 2018, the Mt. Gox trustee, and now whether or not the SolidX Van Eck ETF will be approved. And finally, that through the July surge from 5,700 to 8,500 and subsequent retracement back to 7,700, a key aspect of the crypto market has been slowly but surely increasing Bitcoin dominance. That may be part of a long-term trend in the making, but may be more symptomatic of investors becoming more discerning about a sector that has seen tremendous technological and security improvements in Bitcoin, but little in competing cryptocurrencies. Or perhaps investors simply migrating towards Bitcoin in anticipation of the ETF that may or may not be approved on August 10th, September 25th, or some later date this year. To that end, the $64,000 question regarding Bitcoin's recent price surge and now plunge is how much of it is due, if any, to the SEC's pending ETF decision on August 10th, which more likely, or I should say equally likely, will be delayed 45 days to roughly September 25th. It's a good question, as clearly an ETF approval would be a wildly bullish Bitcoin event. However, rumors about what the SEC might do are equally split. And last week's ruling on the Winklevoss ETF, which I described in great detail in last week's audio blog, provide little incremental clarity, or for that matter, optimism, to those hoping for an imminent approval. Thus, I believe the move off of the $100 billion market cap lows, again for the sixth time, is more of a function of the bear market forces dissipating as investors realize a hard floor has been established. Yes, price volatility has remained, as until its market cap is significantly larger, it will be impossible to avoid with such a thinly traded float. However, the longer the floor valuation above 100 billion remains, particularly if rising Bitcoin dominance suggests an increasing affinity for the undisputed cryptocurrency king, the better the odds that this time around the decline, be it due to ETF rumors, run-of-the-mill profit taking, or otherwise, will be met by higher lows of 7,000 to 7,500, for example, irrespective of whether ETF is approved. To conclude, here's a tweet I just posted this morning for those worried that something bad occurred or someone knows something bad. Keep looking for the bad news responsible for Bitcoin's decline today, as you're not going to find it. There isn't any and won't be anytime soon. Sure, speculation about the ETF approval is rampant, but could last all year and is decidedly not necessary to Bitcoin's long-term success. Thanks and have a great crypto day.